The housing market's been in a bit of a slowdown for the past 18 months, and many people think interest rates are the primary reason why. Lower the rates, the conventional wisdom goes, and the housing market will roar back to life. But is that really true? And how likely is the Federal Reserve to cut rates enough to motivate sellers to trade in their pandemic-era 3 and 4% interest rate mortgages and put their homes on the market for sale? If you haven't met me yet, my name is Jay Trout-Lowen. I'm a Minneapolis realtor. I help home buyers and home sellers navigate the Twin Cities housing market. If you read the news at all, it's pretty clear that predicting the Federal Reserve's behavior is kind of akin to predicting the weather, which is really to say today's forecast is probably accurate, next week, not so much. Just check out this decisive piece of writing in the money section of U.S. News on June 7th. The 30-year fixed-rate mortgage is expected to fall in the mid-6% range through the end of 2024, potentially dipping to the high 5% territory by the end of 2025. However, recent economic developments have led some forecasters to believe that rates will remain elevated at around 7% for the remainder of this year. Okay, it's not the writer's fault. This chart shows industry insiders aren't any more definitive. Fannie Mae, Mortgage Bankers Association, home builders, realtors, and banks. According to this, interest rates this year may drop by 0.5 point or so, but they might not. They could dip down into the high 5s next year, or not. We could just as well read the tea leaves and feel informed. But I would like to suggest that history may tell us something about where interest rates are and aren't going in the long run, and why, if you're waiting for interest rates to fall back to those pre-pandemic and pandemic levels before you buy or sell a home, you're going to be waiting a while. I mean, I get it. From September 2009 to April 2022, you could get a 30-year mortgage with an interest rate of 5% or less. I mean, that sounds pretty great right now, right? That was 12 years of really great rates, and a lot of people have come to think of that as normal. Wouldn't you? But if you look at the annual mortgage interest rate before 2009, you're going to see that from 1971 to 2009, so almost 40 years, interest rates on a 30-year fixed mortgage were above 5%, and for most of that time, they were above 6%. So if you're looking at the historical data, that 12-year period of very low interest rates is an aberration, and those 2 years of pandemic rates, yeah, not going to see that again. I mean, never say never, but really, it's pretty unlikely. Even though forecasters are pretty vague and divided about the way things are headed over the next 18 months, all of them predict interest rates will stay around or above 6% through the end of next year. So if history is any guide, I think those 6% plus interest rates may just be our new normal. If you like this video, please give it a like and subscribe to my channel for more videos on home buying and home selling in the Twin Cities real estate market. Thanks so much for watching.